What is going on, traders? Welcome back to the Traveling Trader. Happy Friday to you. As you can see, I'm not in my current environment. I'm on the road. I apologize in advance for less than optimal audio recording. I don't have a mic here. It's recording straight into the computer. So let us get right into it. Not only did I want to talk about the obvious cryptocurrency prices, but I wanted to go over a few things. The difference between USD and BTC, that's still something that confuses people. And then also talk a little bit about the gaps. The gaps is a topic that I keep hearing questions about and keep hearing people, bounce back and forth on the Discord, on the YouTube, as well as other sources. And, that just tells me that it's being discussed by analysts on YouTube and on Twitter and other places. And people don't really understand what it is, but it's a topic that is, or an idea that's being thrown around. And for the most part, it's being misconstrued in my view. But, I'll go over a little bit about what that is to clear up the confusion and see if there's any real validity to it as it relates to crypto. Looking at the market cap, it's currently 337 bill, pretty healthy. 24-hour volume, 110 billion, again healthy. Bitcoin dominance at a whopping 62.7%. Obviously, Bitcoin has seen a pretty heavy retracement from almost 14,000 to now under 12,000. It was actually under 11,000 just not that long ago, just a few hours ago. But if you look in hindsight over the last 7 days, Bitcoin is still up 20%. Yeah, it is volatile and it's experiencing these wild swings, but that is what you would expect in a parabolic rally. Most altcoins in USD, at least the top alts in USD in the last 24 hours, have rallied back a bit. Now, here's the difference between USD and BTC, right? People are talking about altcoins taking a beating. But what they're referring to is obviously in BTC value. And why is that? Well, see, the minute you switch to BTC, you get mostly red. There's a few green alts, and the reason is it's just simple math, right? So an alt would have to rally in USD at a higher rate than BTC would for it to increase in BTC value. So simple example, if Bitcoin rallies 10% in USD value, then an altcoin would have to rally more than 10% in USD value in order for it to rally in BTC value. So if Bitcoin rallies 10% in USD value, then say, Litecoin or Neo would have to rally 15% to be up 5% in BTC value. So it's really just simple math. It's a little bit more complex than that, how it plays out, because obviously the BTC pairings and USD pairings have their own markets, their own volumes. You could trade directly in and out of BTC. It's not just a straight linear calculation, but in terms of whether to know, how something is up in Bitcoin value or not, or whether it's down in Bitcoin value, is by that simple calculation. Again, the way it plays out in the markets is different because they each have a different supply and demand, a different volume level, etc. A few notables here, you'll see Neo is up 32% over the last 7 days. That has been our biggest gainer in the last couple of weeks. I sent out a trade alert for Neo when it crossed this significant resistance level that has been trying to cross going all the way back to November. If you want access to the trade alerts, that link is in the description. So sign up if you want access to the trade alerts. The Diamond Traders and above gives you access to the stock alerts as well as the voice chats that we hold every week. And you also are automatically entered into the 0.03 Bitcoin drawing, which I do on the first of every month. So it's coming up in a few days. If you want access to that, sign up. So I sent out a trade alert for Neo as it broke that. And, it did hit a high of around $21. And now we are back to, it retraced a bit and we are back up to $18.50. So Neo has been our biggest gainer in the last couple of weeks. Chainlink obviously running numbers on the market, up 56% in the last week. It was also announced on Coinbase Pro. And a few alts that I'm looking to buy back into. Again, I sent trade alerts out for this stuff, but Litecoin hitting a significant support level, seeing hidden bullish divergence between the price MACD and the RSI. BNB falling to the 21 EMA, finding support there, a support level that it's been holding since December. It's this white line here. So a few really good opportunities. When the market is in a bull rally and you see these retracements, that is what you want to see. I know it sounds weird to some new traders. Why would you want to see red? Well, because it allows people the opportunity to enter at optimal levels. It also gives the coins or the stocks or whatever you're looking at a chance to breathe. The reason that you have these RSI and these momentum indicators is because it tells you how exhausted, or tries to tell you how exhausted something is, right? And it can't go up forever. That's why the MACD, the RSI, and all these momentum indicators are capped at a certain level before you see a downtrend in those momentum oscillators. And so we do have to decline in order for us to keep rallying again. What you want to see is obviously the price moving upwards while this is oscillating, hence the term oscillator. So you see on Litecoin, for instance, we're bouncing off of this key support level on the RSI, and you see us bouncing off of it here. That's what you want to see while the price continues to go up. All right, enough talk about that. Looking at Bitcoin. So here is Bitcoin on the daily. This is in conjunction with the CME futures. I'll get into this in a bit. Let's just look at Bitcoin's regular chart for a minute. Currently, for me, the key chart on Bitcoin is the weekly. And why do I say that? Well, the weekly tells us, obviously the extent of long-term trends. There are a few very poignant things here on the weekly. One, we've held this 200 weekly MA for the longest time. This was part of the reason that I believed in a bullish rally once Bitcoin, crossed this significant resistance level here at around 6,500. Once we crossed that and we went above the 100-week moving average, then I was all in on Bitcoin. While a lot of other analysts, I'll leave names out of it, but a lot of other analysts were very bearish on Bitcoin, there were a lot of bullish signs. But in the current term, what's happening lately is Bitcoin is finding resistance at this very key level of 11,800. Why is that a key level? Well, if you go all the way back to January to March of 2018, not 2019, but we're going back a while, over a year ago, you'll see that after Bitcoin fell in January, it tried to hold support at 11,800 with this red candle here, broke it, and then tried to cross it again. 1, 2, 3, 4, 5, 6, 7 weeks in a row, it tried to push past 11,800 and it couldn't. If we take it a step back, going back to November 2017, it held a week here at this resistance level. So this tells us this is a very key level and it is very stubborn, right? We saw resistance here, broke it during the bull rally, and then once we fell, it tried to hold support exactly at this level, and then once we broke that as support, it tried to use it as resistance and break through 7 weeks in a row before tanking and starting the real bear trend that we saw all of 2018. So now we are back at that level again, 11,800, and we have been trying to break it. Obviously, we wicked above it and went all the way up to around 14,000, a little under that, 13,800. Before now seeing resistance here. So don't be alarmed if we spend a few weeks here. Obviously, we are in a bull rally, and it only took a week to break it the last time around. We have about 3 days left until the weekly candle closes, right? Because on TradingView, at least, by default, it calculates it Monday to Monday. So we have about 3 days left until this candle closes. We could break above it here, or we would have to wait until next week to break above it. But I'm still very bullish on Bitcoin. You see the rising MACD, you see the rising volume levels. This is really important. The cumulative volume in the form of OBV, or on balance volume, continues to rise. And something that nobody's talking about here is this white line is a 21-week EMA. This yellow line here is the 100-week EMA. We crossed above the 50 at the end of May, and we're now crossing above the 100. Obviously, long term, we want to see the 50 MA cross above the 100, and we could if Bitcoin continues this bullish rally. But the 21 crossing above the 100, that's very significant. That's something that we haven't seen since before the last bullish rally. And looking at the 4-hour, if you look at the 4-hour on Bitcoin, we saw the white line here is at 11,800. But if you see the pattern that it's currently forming, it's forming a descending wedge that it recently broke out of, right? I'm going to sloppily draw it here. But this descending wedge, which is within the wedge, it's bearish, obviously, because it's declining within the wedge, but it's meant to be broken to the upside. That is what usually happens. So we broke it to the upside, and we're now trading, bouncing off of the 21 EMA on the 4-hour, which again is this white line. So, and we're sitting at 11,800. Going back to the same discussion that I had on Litecoin, this RSI, you do want to see this cooling off a bit before starting another rally. That's the only way that we're going to keep moving upwards, right? Because in nature, things tend to regress to the mean. You can't go up in an infinite manner, in a linear fashion. So we do need to cool off a bit before trending upwards. This is exactly what you expect to see in a parabolic bullish rally. Now, back to the chart where I had the CME futures up, okay? So here I have two charts. I have Bitcoin at the top against USD, and I have the CME futures here. Now, here's what people are talking about with the gaps. If you look at something on the stock market, here we have GLD, this is the ETF for gold. You have a gap here, right? What is this gap? What does this gap represent? Well, traditionally in traditional markets, in the stock market, we have, because we have open and closing times, right? So the market opens at 9:30 a.m., closes at 4 p.m. Eastern time, and the weekends are off, right? So what usually happens is something can open or close above the previous candle significantly, and that's how you get these gaps here, right? So you see gold here on June 19th, it closed at 127, it opened on June 20th at 130, so it opened a whole $3 up, due to overnight trading, etc., OTC trading and whatnot, but the price went up after market, and so when it opened again, it created this gap. Now in crypto, we don't have a gap. We don't have gaps because we're a 24/7 market. There's no open and close. There's no weekends off, right? So we don't have a gap. You do have a gap in the CME futures, which is supposed to be based off of Bitcoin's price. And the reason is because the CME futures trades as a traditional market. So you do have, market open and closes. You do have weekends and holidays off. And so on the CME futures, it creates a gap. Now, what some analysts are concluding from that is that because of this gap, you can then use the CME futures as sort of a reference to, determine whether Bitcoin is going to close these gaps. So back to the GLD, the thinking, some analysts, not only in crypto, but some analysts even in stocks, and this, by the way, there's a huge difference of opinion on this, but some analysts think that the stock itself has a tendency to close the gaps, meaning that because we see a gap here, as you do on GLD, that eventually you're going to see trading that is going to close this gap because it can't leave it open, right? Something to do with the psychology of traders, feeling like we jumped a point or skipped a grade, right? And that has to be, we have to have closure on that before we can see any further trends up or down, right? Now, a lot of analysts differ on this. Some say that that's bullshit, and all this is a product of, like, if GLD, if we do see price movement and we do end up closing this gap, it's just natural price movement based on support and resistance. You could say the same thing for Bitcoin, right? So when you see gaps, for instance, in the CME futures, you see a gap here between June, this was what, June 14th and June 17th. So this was a weekend. This gap was created by weekend trading. Obviously, we don't have, weekends off in the regular crypto market. So you're going to see a contiguous movement of the candles, whereas in the CME futures, you're going to see a gap. Well, looking at this gap hasn't closed yet, right? Between 8,500 and 9,000 on the CME futures. So, there are some YouTubers and Twitter analysts, crypto Twitter analysts, who feel like this somehow there has to be closure on this, right? We have to close this gap. So the price of Bitcoin somehow has to resolve this gap, and we have to decline to, back down to 8,500 just to close this gap. Well, this to me represents a very unnatural analysis of the market, right? Because when you're looking at the stock market and you see that there might be a closure of the gaps, fine. I mean, you're looking at a singular chart, and traders might be looking at a singular chart thinking that, hey, there's a gap here. traders might look at that and wonder whether we're going to head there. There might be some sort of groupthink and herd mentality where traders act in the same way to close this gap, etc. But on Bitcoin, you would essentially have to be looking at a CME chart and then trying to resolve that on a regular Bitcoin chart. Does that make sense? When you're trading in Bitcoin, again, because it's a 24/7 market and there's no weekends or holidays off, we don't have these gaps. So in order for you to even be mindful of these gaps, mind the gap, then you would have to be looking at the CME chart for reference. Naturally, a trader who's trading Bitcoin, who's not looking at the CME, doesn't know anything about these gaps. So for me, it's not a natural psychological product of trading crypto to look at these gaps. Plus, there aren't CME futures for altcoins, for instance, right? So you're only saying that analysts who partake in this thinking are saying that this is only relevant to Bitcoin because we don't have CME futures for altcoins. That's a pretty wild assumption. What I think is that, obviously you saw just the example that I posted before, back here between June 14th and 17th, we haven't closed this gap yet. But if you look at gaps that have been closed, to me, it's really just a product of support and resistance. So if you look here back May 10th to May 13th, again, this is another weekend here where we did have a gap. Yeah, you saw Bitcoin, on May 17th, you saw this wick here come down and before continuing its rally. Well, people who are looking at the gap are going to say, oh yeah, the reason that we saw this wick here is because Bitcoin wanted to close this gap that we see here. Well, is it that, or is it a fact that we did have a support level right around here based on Bitcoin's price movement, and we came back to retest it before moving up, right? To me, that is the more plausible scenario. That's the more plausible analysis. The more plausible conclusion is that we have natural support and resistance levels, and we see the price moving to those support and resistance levels, retesting them as markets naturally do before any significant move up or down. So was this a product of the gap, or was this a product of finding natural support and retesting it before another move up? So again, in order for there to be any sort of psychological impact on Bitcoin's chart because of these gaps, someone would have to be aware of the CME futures chart as well. Because without this, if you cover this, so if you go up here and ignore it, you don't know you have no notion of gaps. All you have are support and resistance levels, right? That's all you have. And it's natural defined movement at these levels, right? Another thing to note is the price on the CME futures and the price on the Bitcoin market is not going to be the same, right? As you know from stocks, or you might know from stocks, futures, options, etc. Yeah, I mean, they do follow the underlying asset loosely, but it doesn't mean that they have to be exactly the same price. That's why sometimes even on BitMEX, when you look at the XBT price, it's not necessarily the same price as Bitcoin. It's its own market that has its own volume, that drives its own price, etc. It's loosely based on the price of the underlying asset, but it's not necessarily the same as the price of the underlying asset. So this moves at a different rate than Bitcoin's main chart sometimes, right? So to say that these two are inextricably tied at the hip and that Bitcoin is looking out for the CME futures gaps, etc., and we have to go fill those gaps, in my view, that is completely senseless. The gaps on the CME futures aren't some sort of hypernatural phenomenon. It's just the fact that it has a market open and close, and it closes on the weekends as well as holidays in the same way that stocks on the stock market do. And you could see stocks on the stock market, like here is, again, back to the GLD, you see plenty of gaps that aren't filled going historically, if you look at stocks historically. And this is on the underlying assets actual chart. So to say that, on Bitcoin's chart, it's actually looking out for what the CME futures chart is doing, for me, that's a stretch. Anyway, if you agree or disagree, that's perfectly fine. I just hope that you got an idea, or more of an idea, about what the gaps are. When people talk about gaps, what they're talking about, why gaps happen, etc. As long as you got more of an understanding than before you watch this video, that's all that matters to me. You can agree, you can disagree. Obviously, not all analysts have the same thinking. Even when we're talking about professional analysts and traders, not everyone's on the same page, and you don't have to be. You can have different analyses, conclusions, studies, etc., as long as it's founded in something concrete and not anecdotal. And as long as it allows you, at the end, all you're trying to do is build a roadmap for you to trade within, so that you're not blindly trading and your portfolio is suffering as a reason. Leave a thumbs up, leave a comment if you have a question, comment, agreement, disagreement. If you want access to the trade alerts, link is in the description. Subscribe to the channel if you haven't done so already. 0.03 Bitcoin drawing in a few days. So if you want that, you have to be a diamond trader or above. Sign up to that. Stay safe out there. Peace.